Hello and welcome to another live trading session. It's been a little while. I had a little weekend holiday, wasn't here on Friday or Monday, but that's besides the point because with the UOTS 2.0, it's very hands-off type of a trading plan. So unless there is something really happening in the market that we can take advantage of, we don't really have to be glued to the screen at all, even less so than with the previous strategy. So today we're going to take a look at our trades and see if we maybe can close one of the couple of naked puts that we have, and what would be the reason to do so. Let's take a look quickly here at our trades. Now, remember all of these put debit spreads, they're just slowly bleeding money. They are leftovers from the previous strategy, and they'll be either gone, expired pretty soon, or if the market turns down a little bit, I might be closing them just to capture a little bit of gain from them. But what they're doing right now, they're just making the account very stable, even more so than it would be with just my strategy. So we're hanging around the same amount that we started with a couple of weeks ago. But I want to clarify and separate the actual strategy from those put debit spreads. But pretty soon, when they're gone, we'll be able to just take a look at continuously keep an eye on the performance of the strategy itself. And the strategy is just these two trades here plus the SGOV that we have right here. So ignore this part, put debit spreads. They are losing money unless the market is going down. These are the two trades that we have going on, and they still have 13 days to expiration. However, one of them, if you remember, the trade plan starts with having one always on, call it always on naked put that acts as a covered call. And then as the market VIX spikes and the market goes down, we then take advantage of that spike and sell another put when it's advantageous to do so. And this is exactly what we did. We sold a put here for that was the one right here. We sold the put for $470 11 days ago, and we captured so far 87% of profits. Now, normally I would probably let this go even a little bit further, but we're pretty close to 95%, and there is very little left to be gained. And with the market potentially facing some volatility tomorrow, I would like to be able to take advantage if the market goes down, to be able to redeploy this free slot for the naked put, if you want to call it that way. And then if the market continues to go down, that's fine. We already extracted most of the value from this put, and then we only have the main put, which will continue to gain in value. And even this put now is basically almost at the money at this time. When we sold it, it was in the money, not deep, but it was in the money. Now it's at the money, but there is now significant extrinsic value left in the naked put, so we don't want to be closing that as of yet. So we're going to let that one go on. And this one, so let's see, it would cost us roughly this. Maybe we have to up it up a little bit, but let's see if we do this. If we try and go for that amount, boom, we closed it for 12, and we'll record that. We could have nickel and dime it a little bit, maybe pay a little bit less, but it is what it is. We just closed it for let me see, that's the one right here, and we closed it for -12 on this date. And after fees and everything, we show a profit of $406, and this is significant. This is our alpha. If we were to close, and this is just now to show a little bit of how the strategy performs, let's assume that we just want to close the other trade today, which is not what we want to do. But let's see what that would look like comparing to market overall since we started the strategy. So if we go here and go close position, it would cost us 61, 60, let's say 62. And if we go back here and put minus 62, and let's do this so the numbers work out. As you can see, that would show an overall profit of $34. Remember, we rolled it couple of times. So initially we collected 28.50, then we rolled it 3 times, and we collected additional 42.25. But since there is still extrinsic value left in that put, we didn't realize full value, but we did realize the value from the other one. So if we were to close this, and this is very exciting, and I think the more I study this, the more I'm confident that this strategy is really a solid passive trading strategy that will outperform the market. And I think if everything goes right, I think my target is somewhere around 10% alpha over and above whatever the market gives. So I don't have a particular CAGR in mind, but I do have an alpha because the strategy is very dependent on the market movements. But if we can get 10 alpha out of the strategy, I think we're in good shape given the amount of risk that we are taking, which is significantly less than previous strategy and most other strategies out there. But let's take a look at this. So if you see here, after fees and everything, we're talking about $440 in total profits since August 29th. So if we take a look here at the performance, when I opened the strategy, the SPY was at 563.56. Okay, 563. So let's go back here. So 563, and if we take a look at sorry about that. Where is my thingy? There. The SPY right here, it's 562.90. Okay, call it 563, right? So damn it. 563. So as you can see, market is flat for the whole duration of this. Obviously went down and then went back up. But if we were invested in SPY, which is our benchmark, if we were invested in SPY, we would be flat right now. But we are not. And because we were able to take advantage of the VIX spike and the market pullback, we gained $440. And given that our account size was 47,500 rounded up, you can go and do the calculation here. So 440 divided by 475 will give you 0.9%. And so that's 0.9% for how many days? 17 days in this month and a couple of, so 18 days. So if you want to divide that by 18 days and then times 360, you're looking at somewhere around 18.5%. Obviously, this is a small sample. I just want to give a comparison to being just staying invested in the market. So an 18% overall return on our account during the time when yearly return during the time that the market was actually just flat. So that's not always going to be the case like that. Sometimes the market will run up ahead of us and we might not be able to continuously keep up with it. But overall, I think we should be able to extract extra value. And so now that we closed this one, so let's go back and delete this and this because this is now closed and this one is still open. We are now back to having only what is it? The leverage. It's not 1.6. I have to recalculate this. Let me just see. Why is it? Let me see. Maybe it is one. No, it can't be 1.6 because we have. I'm sorry. It looks like some of my formulas here are not exactly right. But if we have 28.50, and it should be 0.6. Let me see real quick here. Why is this? This is M8. M8. Oh, this one is wrong. Okay. Oh yeah. Well, this is because this number, this was here. I'm sorry. The thing calculates the whole column. So we are at 0.6 notional exposure, 0.6 leverage, so less than 1x. So we are facing less exposure than if we were just fully invested in the market. We can absorb or we can take a huge hit at the moment. And that's actually what we hope for. So my hope tomorrow is not that the market goes up. My hope tomorrow would be, if anything, I don't really care if it goes up. This naked put will continue to make money. But if it goes down, I'm looking for a VIX in the neighborhood of 25, maybe. That would be ideal to strike with the first naked put, and then after that, if we continue to go down and if the VIX goes somewhere, closer to 35, that would be ideal for the second one. Now, one thing that obviously as I go, I'm using the learnings to maybe modify a little bit. And what I would do the next time around when I'm shooting the second naked put, like I did the one on the 6/9, I mean September the 6th, I I sold the put a little bit below money, out of the money. And I think with the second one, I actually want to be at the money or even slightly in the money, depending on a couple of things, because we would extract more value, and there is no reason to leave that on the table. So I would probably be looking closer to the money and collecting a little bit more money on this second put. By the way, any questions on this one, guys? And if you find this video useful, please make sure you like it, subscribe, and come join our Discord. Link is in the description below. But we're looking really good. I'm very happy with the strategy. I think has a lot of potential for a relatively smooth ride and outperformance of the market by about 10%, hopefully, or so. And this is long term, obviously. We're going to be taking some ups and downs along the way, but this is what it is right now, and there is not much else to it. We have one naked put right here, and keep in mind we are able to deploy our full amount, almost the full amount, towards the T-bill ETF, SGOV. You could use bill or you could use something else. And this is a significant contributor to the overall profits because we have so few naked puts going on that we are able to, and our buying power is next to nothing. So as you can, if you go right here, exception, I don't know why, but we're basically using no buying power at the moment at all for the strategy, just the SGOV. And we have cash balance and maintenance access, so we are good on that aspect as well. We shouldn't be paying any interest to the broker on our money or overnight settlements or anything. So I think this is great. One thing again that I would probably do next time, I would not go for 3 weeks on this one on the naked put. When I have to roll it, I would probably let it get assigned. If I could go maybe 2 weeks, that's fine, but maybe 3 weeks is a little bit too long because now the market can run past us and we still have to hold on to the trade because there's extrinsic value in it. But if we had just a long future, then we would be gaining as the market goes up, and then at some point we could sell a call, but that call would be more juicy and it would be in addition to this. So I think it would be probably better if we just take the assignment here. But we'll see next time we have an opportunity. We'll analyze it and see if we can do something like that. But yeah, that's all I have, guys, and have a fantastic rest of the day, and I will see you. Well, not sure when the next trade is, but whenever it is, I'll let you know. Have a good one. Bye.